What's up, everybody, and welcome to Accounting and Accountability. It is Monday, the 26th of September. My name is Dr. Amanda White.
And I'm Dr. Nelson Ma.
We're remote today because I have my kids on school holiday, so they're out, hopefully, playing Roblox and watching Pokemon quietly while we do this. And then next week, Nelson, you're going to be in Norway.
Yes, I will.
So what's the weather prediction for Norway?
Basically for them, it's like spring, right? And so spring, like the start of spring for them.
Autumn.
Basically, autumn. Oh, no, so autumn. Sorry, autumn. The start of autumn for them is kind of like the coldest period of winter for us.
Oh, so
it's getting worse.
Still need warm clothes.
I was told by a friend who has family in Norway that they're very switched on the fireplace. So it's towards more of the north of Norway. So a little chilly. So yeah.
Pack a down jacket.
Bring your down jacket. Yep. Packing lots.
Well, luckily you've been hanging out in Sydney's winter with some Canadians from the case competition who were like toughening you up for cold weather.
Oh yeah, like even during like the coldest periods, I'd be like walking around in my coat and like a jumper, and they'd be walking around in their t-shirt, being like, "This."
It's all a matter of acclimatization and what you're used to. So this week, our first story is around Donald Trump, and he's been charged in the state of New York with financial fraud because they claim he's falsely inflated his net worth by billions of dollars to encourage banks to lend money to the Trump organization and their companies on more favorable terms. That is probably lower interest rates, lower debt covenants, which are sort of like special requirements that you have on your loan, than if there was more risk. Let's say they had less assets. So Nelson, how is this accounting?
Well, so in order for organizations to go and obtain a loan or some sort of financing from an external institution, well, they need to prove that they have good, solid assets. And they have good cash flow coming in that proves that they're a good business. That
nobody wants to lend money to someone that's going to go out of business.
If you lend to us, we're going to pay you back. And so they look at different conditions, basically the financial statements of the company, right? Their assets, their expenses, their revenues, just to make sure it all adds up. So I guess, Amanda, what does this have to do with covenants? And loan covenant.
So I mentioned the word covenant before. This is not a link to the Halo game or TV show in which the covenant are the bad guys, but the covenant is like a set of protections that the lender puts in place. So it says, we're going to lend you some money, but here are the terms and conditions in essence, and you have to stay within certain limits. So sometimes those covenants might be things like you must have a maximum cap on debt to equity, or you can't take out a new loan without talking to the bank or that lender. You have to keep a certain amount of cash on hand.
Yeah.
And if you breach these covenants on your debt contract, then the consequences could be that the interest rate might go up. So the amount you have to pay for interest will increase. It could be that the loan becomes due straight away. There could be penalty fees to pay. So it's really important to have these covenants to protect the lender. And they're most often around different sorts of financial ratios. Quite often it can be, we have to make sure that, you have this amount of inventory or cash. So Nelson, how did Trump or the Trump organization potentially engage or allegedly engage in fraud in relation to their financial statements?
Right. So this relates to the assets that they have on their balance sheet. And so Trump, he's been known to embellish a bit, right? And so he did the same thing with his assets. So there are allegations that he inflated the value of the assets that he held. Think about Trump Tower, like in Washington, or the value of his Mar-a-Lago resort, which he's very, very proud of. Even, really obvious things like the amount of cash he had on hand, embellish that, or ignoring.
Well, we know that went wrong at Wirecard, right?
Yeah, that was the whole Wirecard thing. Or even like really sort of more technical aspects of accounting, like the methodology, adding in intangible items, which we know can't be incorporated into your financials unless you've been acquired. And so when it comes to like, inflating these asset values, so what are asset values based on and how did Trump inflate them?
Yeah. So an asset is really something that holds future economic value. So if we think about a machine, the value of that machine is typically, how much we pay for it, but it's going to produce inventory that we're going to be able to sell later on down the track. And so an asset, when we're trying to figure out the value, it's about how much revenue is it going to produce and potentially what is the market value. Now, a lot of Trump's businesses are related to property. So it's related to the valuation of that property. Now, we know that historical cost accounting and the historical cost principle says you should record stuff at the cost that you bought it for 10 years ago, 20 years ago, 100 years ago, which might mean that, some businesses have a building or land on their books that's only worth 10,000, apparently, according to historical cost.
Yeah.
But there is a way to revalue assets based on the market value. Yep. And then you make a gain if it was, you bought something for 10 million 20 years ago and it's worth 100 million now, you can go through a process of revaluation to update your balance sheet.
Yeah, and lenders want to know
that to try and, give themselves more assets so that they can use that as collateral for borrowing.
Yeah, which is okay. But I guess in the case,
which is fine as long as your valuation
is honest. So if we take an example of, I guess, Mar-a-Lago, they valued this property at $739 million. And a lot of that value was based on this idea that if he had sold this property, like it could be used for any purpose, like residential use, etc. But Trump himself had actually donated those residential development rights in order to acquire that property, which means it couldn't be turned into like an apartment blocks and those kind of things. And so that obviously limits the use of that particular piece of land, which reduces its potential value. And at the same time, the Mar-a-Lago resort was generating revenues of less than 25 million, and it was claimed that it was generating 75 million in revenue. So the asset was valued was
overvalued, plus the future potential profits.
Yeah,
was not allegedly was not appropriately calculated. And if I was the bank and I'm lending to any big business, I would be looking for an auditor's report. So has an auditor that is reputable gone through and conducted an audit, which is a comprehensive check of the truthfulness of the financial statements?
Yes.
If you can't get an audit, you could ask for a review, which is a different level of assurance. But often in a big sort of dollar value transaction like this, you would want to either rely on the audit that was provided for shareholders, though that doesn't create a legal sort of, you can't legally rely on it, but you can use it, or pay for your own audit if you think that there was risk.
Well, this is really funny, right? Because if we think back at, roughly a year ago or so, his auditor, Pitcher Partners, actually resigned and said, no, we no longer, you can't rely on.
He's having trouble getting a lawyer.
Auditor. So we maybe could have seen this coming.
Something's a bit fishy going on there. So it'll be interesting to see how this plays out.
Yes.
Because, regardless of what size business you are, big or small, you're supposed to be following the accounting standards, and, having your books audited if you're a publicly listed company, or large privately listed companies will have audits, hopefully, by their shareholders to make sure that their investments are being managed appropriately. Now, added to the woes in the US, they've got a whole lot of things going on right now. Fuel prices, they've got inflation going through the roof.
Yes.
And so one of the ways, and we've talked about this before, to control inflation, which is demand outstripping supply, causing a rise in prices, is to try and increase interest rates to stop people from spending and saying, hey, I'll make more money by putting my money in the bank rather than spending it. So, Nelson, what is the situation in the US at the moment?
Okay, so Amanda, as you said, interest rates are used to fight inflation. And so we know inflation is at a 40+ year high at a yearly rate of 8.3% in the US. So if something costs $100 today, it's expected in a year to be about $108. So quite a big jump, right? And so you wouldn't expect that in the normal period. So last Wednesday, the US Federal Reserve, it's kind of like the RBA in Australia, raised the federal funds rate by 0.25 0.75% or 75 basis points to a range of 3 to 3.25%. So the funds rate is basically the interest rate charged by banks to borrow from each other. And this impacts markets because it means banks are paying more to borrow money, right? And
that means they're going to charge you, the lender, more to borrow money.
And so I guess from what happened was that all the major indices in the US, the NASDAQ, the Dow Jones, the S&P, they all dropped between 1.7 and 1.8%. Right? So quite a large decline. So Amanda, how does accounting play into this? How does interest rates affect the stock price?
Yeah, so interest rates affect companies because the share price is based on what analysts and people who buy and sell stocks think are going to be the future profits and future returns on the company. So they're making a bet on whether they think the company is going to do better or worse in the future. Remember, our profits is our revenues minus our expenses. So if interest rates go up and businesses have variable interest rates on their loans, then interest is going to go up. They're going to have higher interest expense, which means lower profit. That also means that as inflation goes up, and typically wages are not rising at the same pace as inflation, people are actually earning less in real dollar terms. So if you're earning less, everything is becoming more expensive. Everyone starts to become more hesitant. Oh, do I want to spend on that? Do I buy a new big TV? Yeah. Should I upgrade my car? And that affects spending in all sorts of different ways on, middle-class luxury items, not the high end of town, right? People who can afford Chanel and Louis Vuitton and, expensive vodka are still making money. It's the rest of us in sort of middle bracket that are affected.
We talked about Ferrari last week, right?
We talked about Ferrari last week. Yeah, I'm not buying a $500,000 or $700,000 car. It's like more than my mortgage. But you're going to have lower demand for a lot of goods. There's going to be less going out to eat, less entertaining, potentially cutting back on streaming services. And so with the fact that you're going to have more expenses, businesses are going to have to, their inputs are going to cost more, plus they're going to have lower spending, profits are expected to decline in the future, which means that if there's less profit in the future, then people are more likely to think that the share price is going to decline because they're not going to have those future profits. So it's really, we're waiting to see what market growth and GDP rates are going to be, because once you have negative growth over a certain period, the risk of increasing interest rates too high to try and cut back on inflation is that you tip the economy into a recession.
Yeah.
We can talk about that more a little bit next week, but it is like, you could bet on whether there's going to be a recession or not.
Yeah, I guess as a practical example, you talked about, when individuals don't have as much money, they cut back on the things that they deem as not necessary.
Discretionary.
So you talked about Netflix subscriptions, and in the last basically 3 or 4 days, Netflix has dropped about 7.5%. So that's an example of a company that's really heavily impacted.
Yeah, and they had a big event over the weekend, really pushing all of their new shows. They broadcast it live on YouTube, but you can check out all of the, they're like, oh, come and stay subscribed so that you get access to new Stranger Things and new Witcher and new blah, 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 to try and keep people going. Because, we'll eat out less, go back to homemade pizzas. There are a whole lot of different things, even things like really expensive cuts of meat, luxury foods. People will turn more to home cooking quite often than even buying something pre-prepared. So the fake away, which is the fake takeaway, is probably going to see a bit of a resurgence. Now, I made a game last week. Nelson, you've made a game for me this week.
Yes. Okay. So we typically think about share investing as, rich people put their money in shares to help them avoid tax, that kind of thing. But share investing is can also be used by governments to create wealth for all their citizens in their country. And so they can do this through
as long as they distribute it back to them.
So basically, countries will have what they call a sovereign wealth fund, which is like an accumulation of the government's excess money that they'll invest in order to generate more money so that they can spend on public services.
Oh.
So obviously, some of these sovereign wealth funds aren't doing too well, but as of last reporting period, Amanda, which country do you think has the world's largest wealth fund by total assets?
Oh, Saudi Arabia?
Not quite, but that's
Because I'm thinking of all the greenwashing, the sports washing that's happening with the Live Golf Tour backed by the Saudis. There's, yeah. Oh, no. So who is it?
So it's actually Norway. It's a little plucky country in
Well, see, Norway is very much based on this idea of democratic support for everybody. And I can imagine that they would have said, okay, everyone, you're going to pay a bit more tax so that we can create this wealth fund.
Well, that's the thing, is that they made a lot of money a while ago based on oil and gas, because they had all these reserves, and they basically, instead of distributing to individuals, they actually took that money and put it in a sovereign wealth fund.
So rather than also giving over rights to companies for them to generate the wealth, the government has done that. That's cool.
So right now they've got a wealth fund that's worth $1.26 trillion.
Whoa.
Which for a country of 5.5 million is amazing. Compare that to like China and their largest sovereign wealth fund, which is about $1.22 trillion.
Do we have one in Australia?
No, we don't. I know we do. It's just a lot smaller.
Is that future fund thing where we sold Telstra and we created a fund?
Yeah, the future fund was run by the former treasurer. Yeah.
That's really interesting. Well, I guess when things start to go bad, Norway might be. And this is again,
it's check it out.
It's that perspective, the same that you see in a lot of Scandinavian countries. Whereas I think it's Finland. There is no such thing as a private school. The hardest job to get into is teaching, because it's, well paid. Plus, it's such an important job, and they've really sort of, it's still capitalism, but they're thinking about it from this perspective of the greater good and sustainable development as well.
Absolutely. So, and actually that's interesting, because they actually have a lot of principles, and you can find this on the Wikipedia page on their website about how they invest. So they won't invest in tobacco. They won't invest in companies that don't that aren't green, basically, that aren't sustainable.
It's a big trend in moving into sustainable and ethical investment. If you're in Australia, I really like Australian Ethical, not a paid ad, because but I really like Australian Ethical from their perspective of investing as well. They don't invest in horse racing even, so from that animal cruelty perspective.
Absolutely.
So thank you, everybody. We'll put links to all of the stories in the show notes. We hope everyone is doing well. Nelson, pack your woolies. You're heading to Norway on Wednesday. Yes. Next week, I need to find a special host, a guest host to host with me next week. So hopefully I will find somebody.
Yes.
If you're a student out there and you want to be my guest host next week, contact me. I'm happy to have a student as a guest host next week. But UTS students, it's the break week. So have a great break. We shall see you soon.